it is actually the economic release that the markets are waiting for. So we can say that it is something that it will be key for next week's Fed meeting. So let me just make sure that I'm sharing my screen as well. And hopefully, okay, chat is on. We are good to go. So as I was saying, and let me share the screen as I promised. Let's start with the dollar index just to see where it is settled ahead of the data. We'll shoot down to the 30-minute chart. We can see some kind of you can't see obviously, now you can. Perfect. So we can see a bit of a rebound in the very, very short term. This is a 30-minute chart ahead of the numbers. So we are expecting if I can share also the calendar, it would be great. So we're expecting a 0.7% rise in a monthly basis for November. Let me quickly share the Chrome tab as well, the calendar, the Forex calendar, so you will be with me. So this is what we are expecting, what the markets are, sorry, not we, what the markets are on average expecting. So they were expecting a decline on inflation in November from the 0.9% that we've seen last month in October, while we are seeing something a similar decline also in the if we exclude the food and energy inflation, we're seeing a bit of a decline as well. So with the headline reading, the yearly basis reading for November, to however to show a bounce at 6.8% from the 6.2% last month. So this is what is widely expected from the markets. And let me just bring back the MT4 on. Perfect. So guys, why so this release is so crucial? It's crucial because it will show whether we're gonna see further pressure on Fed or not. Okay, so far what the anticipation about the Fed? We have seen that where we're standing right now is on a pretty much certain acceleration of the quantitative easing taper on next week meeting. Okay, this is something that is fully expected to be announced next week. So now, what is going on with the inflation? The assumption so far is that the end of the quantitative easing it will be in March. Okay, however, it is unlikely that the FOMC will commence lift off as soon as May, since as we can see, the markets have already started pricing in something like this, especially if inflation starts decelerating by then. Okay, this is a long-term perspective, but in regards to today's number, okay, the rising of further inflation, as I said, is something that is adding pressure once again on the central banks, on the Fed, and central banks in general. So this is something that it could shift the FOMC on completely abandon that transitory inflation they were talking about so far the whole year. So as I mentioned, further jump is expecting. So let's wait and see in 4 minutes from now. Until the data are out, I would like to brief you a bit on what happened so far this week. As you already know, we had a bit of a more risk on, risk off, virus on, I should say, virus off sentiment this week. And very negative news from Omicron initially. Now a lot of announcements from pharmaceutical companies, mainly that have managed to calm down the markets in regards to the Omicron variant and the impact that it might have in the in the global economy recovery. So we've seen a lot of ups and downs for the whole week. But currently, since yesterday, we have seen that the markets have ignore a bit the headlines in regards to Omicron. They have shifted solely on the anticipation of the inflation later on. That's why we have seen bond yields initially yesterday night overnight reaching in a bit. Currently, as we are just a few minutes away from the data, they have cheapened slightly as well. And there is a lot of mixed conditions ahead of the data, with stock markets, for example, consolidating a bit. So if I just let me just so here we have Dow Jones. You can see how the consolidation that dominates since yesterday night. So a lot of mixed conditions have been seen, a lot of mixed and sideways performance has been seen in the global stocks. And as I said, the main reason for that, maybe the sole reason for that, is that the markets are well expecting the inflation in order to maybe reposition get the repositioning of their trades ahead of the new week, because it's anyways the end of the week is Friday. So we are is something we tend to see at the end of a week, is a repositioning for the majority of the market participants. So this is USA 100, otherwise well known as Nasdaq. We have seen this is Dow Jones as well. A bit of a boost so far today from the beginning of the day, but you can see that there is a lack of sentiment for the time being. Consolidation mode as well ahead of the data. So something, however, that is worth mentioning in regards to the what happened overnight until we have the news out, is the only thing that was the highlight. Something was the highlight of the night, and I'm sure that you might already know about it. Is the worries once again, the resumption of worries in regards to the Chinese property sector. And this is why we have seen the Asia session to be a bit under pressure. So Nikkei closing lower. In general, the Asia stock market being a sell-off. So property sector worries are back in play with since Evergrande and Kaisa Group Holdings officially defaulted on their dollar debt. So, okay, this is something that we didn't really. It was like a hot potato back in 2 months ago, but we can see that now has been a bit ignored by the markets. So let me double check that the data are out, and they are. Let me share my screen with you. Then let me also put on. Let's get back to dollar. Come on, come on, come on. Dollar index. Here we are. A dip has started. This is a 30 minutes chart. And okay. So where is it? Not 0.8%. So it beat expectations slightly. So let me see what's going on. Let me see if find the breakdown as well. At 0.8% rather than 0.7 that was expected. The headline remained unchanged. The same stands for inflation excluding food and energy headline at 4.9%. The non-seasonal adjusted number came slightly below expectations. It's around 114 points only. So very, very close to the forecast, even though it has provided the monthly reading, the monthly inflation, the November inflation number came slightly above expectation at 0.8%. So let me check a bit whether we have already the breakdown of the data. So, okay, come on, come on, come on. Okay. So just trying to. Uh, okay, the headline was. Let me double check what's going on over here. Headline was supposed to come 6.8%. Yeah. So oh yeah, so it wasn't. Sorry, it wasn't unchanged. The headline was actually made expectations from the 6.2%. It moved to 6.8%. So inflation is keep rising and rising and rising. So the result is pretty much highly anticipated. We were expecting a bit of expectation. We were expecting to see rising inflation to remain the central scenario, and that's why dollar turn into the downside. That's something that is adding is pretty much this will be pretty much to be factored to pressure the FOMC once again. The rising inflation, and as you know, the odds right now in regards to the Fed are pretty much forecasting around 3 rate hikes in 2022. So yeah, so. That's a very significant release today. I thought, okay, so that's adding, of course, it's adding pressure on the US dollar. Okay, so it seems that currently the market is really reacting reasonably on the rising inflation. So this is something that is adding further arguments, we could say, on the hawkish side of the Fed. So 96.08 currently a big short-term candle, 30-minute candle for the dollar, reversing the 2 days. Yeah, nearly 2 days. It's halfway. It's about 9, 10. Yes, actually reversing the days gains, and it's back to 9th of December, back to the 96 floor round number is the next immediate support level, of course, in the short term. So you can see, let me just put, this is the 1 hour chart, guys, that it has already reversed more than 50% of the last 2 days gains. So thank you for the good vibes. Good. Hello everyone. Hello. By the way, uh, feel free to ask anything you want. Right? What is this? Toneka, this is the reaction due to the inflation numbers. So a big dip has been seen on the very few more on the announcement of inflation. A big dip for the US dollar on the rising inflation that has been confirmed right now from the US in November, and it's something that is anticipated to be seen also in December. The inflation too is not something that is temporary. Actually, we are expecting that the inflation will keep rising even into the very first quarter of the year ahead. And I remember something that Stuart told me earlier in regards to a comment from Mr. Biden last night. Trying to find it because I don't really remember it, but he said that it could be really high. It's 7 what was he said? I totally forgot. 7.2. He said 7.
No,
What was it?
no,
I
no,
don't
he
know.
told
What
me.
was it?
He
He
said
said
that
it would be
it's-
really high.
He suggested it might be high, which is a bit naughty
Oh,
because it's
yes.
market sensitive information.
Yeah, indeed. So I don't know whether you have heard, Stuart, but it's not something that the president should mention because it's something that could that it's a very sensitive information, and it could change the sentiment in the market. So yeah, he mentioned that it is that it could be high, that the inflation numbers today could be high, and indeed they came above expectations. Well, we found the same article. Yeah, Biden's administration signals Friday's inflation data could be high. That was an announcement from Reuters in regards to the jump in inflation. Um, so a lot of shorting has been seen right now on the US dollar. So let me just get back to my news feed. So let's shift to the most famous currency pair of all, and I'm referring to euro dollar. So euro dollar spiked back to 113 on the data release. So 113, even though the outlook remains under pressure. So um, um, it's not a it's definitely a bit of expectations, but it is a strong print from the US inflation. And as I said, we could reinforce expectations that the Fed will adopt a more aggressive policy next week in order to respond to this stubbornly high inflation. But have in mind, guys, that in regards, if you're like a currency pair traders, you should always have in mind the central banks of the that represent the currency pair. So, for example, this euro dollar, what you need to have in mind the differences between the Fed and the ECB. So, despite the high inflation and the jump that we have seen in euro dollar right now, overall, the euro dollar, if I just zoom out and go to the higher scale, to daily chart, for example, remains under pressure. It's an overall downtrend since the actually nearly the whole year, but definitely since the April 2021. So why is that? It's because of this deviation between the FOMC and the ECB. So a more yields differentials due to the different approaches that they are holding. Okay, they are similar approaches, but with the Fed acting first. Okay, so that's why we are seeing that overall the euro dollar expected to remain under pressure. So, and let me just check whether you have any questions. Yeah, so always have in mind, because we will be a massive week ahead. We have ECB, we have Fed, we have Bank of England policy meeting, we have Bank of Japan as well. We have the rate decision from the Swiss bank, then SNB. Even though this is likely to be ignored if we compare if we say that the ECB and the Fed is the highlights, and then Bank of England, of course, would be in the spotlight, but. Yeah, as I was saying, you need to always have in mind uh, uh, both sides. So for euro dollar over here, what's the deviation between the ECB and the Fed? So Fed is expected to be sound to proceed in a more aggressive stance, hawkish stance, and etc. While the ECB could see a bit of a debate, and what is expected is not to take actions, but what is key about the ECB is whether they're going to boost to APP bond purchases once the PPP purchase have done. So this highlights the difference in the two policies, the Fed and the ECB. So that's why, in general, dollar buying has been seen a feature the general for the last 2 quarters. So let me check whether. So now is your session, guys. Tell me what currency pairs you want me to analyze, okay? And just not to do something that won't really interest you. So can you check pound dollar? Of course I can't. So okay. This is pound dollar, 30 minutes chart. It it would be quite helpful, if you want me to analyze a pair or an asset for in a particular time frame, okay? Because I noticed that a lot of you are confusing what they are get confused with what we are saying. We are saying to us, okay, but you told us that is bullish, but it's not, it's falling, but it depends on the time frame. That's why we're separating. We're saying, okay, overall in the medium term, so that implies to daily and weekly chart, and we say intraday, we specify whether we are in 1 hour chart, whether we are in a 30 minutes chart, and etc. So it would be helpful if you want us to analyze a particular time frame or not. Okay, so pound cable. So let's start with cable. I am in a very short time frame. This is the 30 minutes chart, my dear Sami. Okay, I mean the 30 minutes chart, we have seen this initially a boost on the day due to the data, boost up to 1.3240, even though you quickly get back to the mid of this candle at 133.23. Anyway, the if you as you can see, if I zoom out a bit, you can see that the cable has been consolidating. I missed, yes. So two questions on Facebook which I need to reply. Okay, okay, before we analyze, let's reply to Peter and to Tom. Very, very okay. So great questions. What is Fed likely to do after inflation? Will Omicron still roaming around? Okay, it's something that in regards to the Fed, it's something that we have already replied, but I will repeat again. So the fact that inflation is keep rising, and as long the inflation is keep rising, guys, you should know that the one of the few tools that the central banks have in order to control the overinflation, the hot inflation that we are currently seeing, is to rate hikes. So that's why we're saying that big number rising inflation, due to the fact that the inflation today has exceeded expectations. So we keep seeing a rising inflation. Okay, it was at 6 point. Let me share the Google the calendar. Come on, come on, come on. Here we are. So we have over here, we're seeing in a monthly reading the inflation at 0.8% from the 0.7% expected, and the headline, so the whole year, the yearly basis inflation from 6.2 to grow at 6.8%. So the higher the inflation gets, then the only way for the let me get the charts back. The only way for the only tools that the banks have in order to control the inflation are with a more to be sounded more hawkish, and by sounded more to proceed in a more hawkish stance. And what we mean by more hawkish stance is usually to rate hikes, and of course to limit any to end the quantitative easing programs that they actually apply in order to help the economy after the pandemic. So yes, what it means is a rate hike, increase of interest rates sooner than what was expected, and also in regard to this, we have the Omicron or not around, even though Omicron is further risk for the economy. So that's why Omicron might be another thing why they should proceed as soon as possible. And that's why the markets are now forecasting as I mentioned, three interest rates for 2022. For 2022, sorry, from the Fed. Now, so the higher interest rates, if you already know, that implies that is something that could boost further the US dollar, of course. Okay, so just to simplify a bit the things, guys, so you will understand what I mean. Um, the higher the interest rates are, okay, this then the more expensive we can say a country's currencies could get. So that is something that could support further the US dollar, and something that it has already priced in. That's why we have seen the oil dollar holding gains. So if I get back, can you see this? Yes, you can. You can see that the dollar, okay, if I zoom out, it was well supported in 2021. Okay, it has managed to sustain some gains. This is because the markets are pricing in, they were pricing in the actions of Fed. Okay, so and then, of course, the positive data that we keep seeing from the US, from the United States, growth of the slow recovery of the economy. Okay, so US is one of the countries that is doing quite good, and it hasn't shown any impact yet from Omicron variant and etc. So, okay. Let's. That was for Tom. Tom, hopefully this has helped you. If you can hear us. So now let's shift to gold. And thank you for this question, my dear Peter. Let me actually find also the gold chart as well. Do, 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 do. Where it should be? Okay, that's a bounce. So, okay. So, is this good for gold? Okay, theoretically, it's not. Okay, so the higher the inflation is, okay, then as we said, the Fed should turn hawkish and increase the interest rates. So I will start with what it could mean for the long term, for the whole outlook of gold. So um, further interest rates from the Fed, okay, guys, it's actually something that could add pressure on the gold, okay, because gold is a non-yielding asset, right? So uh, the higher the interest rates are, then the more attractive then this means that the yielding assets are benefiting, right? Gold is considered as inflation hedge. So high interest rates will increase the opportunity cost for holding non-yielding assets such as gold. Okay, so this is something that it could add pressure in the gold in the long term. Okay, so this is something that you should have in mind. So that's why if I zoom out and go to daily chart or even daily weekly chart, we can see that the gold back in June of 2020, it was at 21,000, 2100s. Okay, so and it kept moving lower or even consolidating the second half of the year. So in the long term, uh, you should have in mind that the gold, the higher the interest rates, is something that could add pressure on the gold because it's a non-yielding asset. So the dollar will get stronger. So that's why the gold could be seen being under pressure or even getting back to 16,000 and etc. For the time being, is sideways. This overall technical picture, at least, is sideways, as we have seen in the last few months, bouncing between the 1700s to the 1870 area, forming something like a descending triangle, we could say. So now, in the very short time frame, today, right now, for example, that in the 30 minutes chart, in which we have seen the release of the inflation, so we have seen a boost on of the gold due to the pullback on due to the decline of dollar. But from fundamental perspective, this boost looks to be limited if we consider what the high inflation means. Okay, so have this in mind. This looks to be a limited bounce if we consider that this could be taken as the inflation data today are actually literally pointing to the fact that it needs to take action. Okay, so a big bounce on the data for gold up to 1782. Okay, 1782. So a resistance area that we have seen also yesterday in the US session, bounce higher. Can you see this? Let me double check. Yes, you can. So this is a 30 minutes chart, guys. I don't want you to get confused. Okay, 30 minutes chart, bounce to 1782. An immediate resistance area that we have seen also yesterday in the US session, forming like something like a rounding bottom, which tends to be a bullish pattern, but this candle has not closed yet. So we need to wait and see to identify whether it will indeed continue extending higher, or whether it will fail to form this rounding bottom. For the time being, the moving average are keep pointing higher. MACD turned positive. RSI is at 85, overbought already, but pointing higher. And stochastic is keep pointing higher. So if I consider the momentum indicators in the 30 minutes chart, it looks that there is further steam to the upside for the next few minutes. We're in the 30 minutes chart. So yeah, so for the very very short time frame, so let's wait a bit, another 6 minutes, for this candle to close, to see whether it will actually manage to break the 1780 territory. So but until we do that, let's see the daily chart. So let me just clear a bit this mess. Let's make it white. Why not? It's too bright for me though. Okay, let's keep it like that then. This is the daily chart. Consolidation was the theme of the week. But okay, let me just, if I connect our daily fractals, we can see that it remains in a decline the last 3 weeks. Yeah, nearly 3 weeks, failing to actually to break the 200-day moving average. So in your chart, guys, you should have a node on the 200-day moving average, which it stands at 1797, or at least have a node on the 1800s territory. Is a key resistance area for gold in the medium term, in the daily chart. Round number, key psychological level I'm referring to 1800s, coinciding with the 200-day moving average, okay, and just a breath away from the 20-day moving average as well. So it's a key resistance area for the medium-term outlook of gold. But just to summarize a bit, if we consider the medium-term outlook, the asset remains within a down channel, as you can see, failing to extend gains. Well below the November highs, so remains under pressure. You can see stochastic over here turning below 50 and pointing to the downside. RSI also below 50, failing to post any to point to the upside. So the overall outlook for gold remains under pressure, while intraday it has bounced. So it seems, yeah, the candles, another 3 minutes to go until the candle is closed. Let me just scan a bit your questions to see where we're standing. I haven't replied to, so I will get back to gold in 3 minutes. I haven't replied to some in regards to pound. Okay, guys. So let me just. Okay. So dollar remains under pressure. So the dollar indeed dip, but we're seeing that it's trying to recover. That will be interesting to see how this will end up. And it seems that because the number didn't came as high as it was feared, there is a bit of a positive sentiment as well, because it wasn't as high as the markets were anticipating. As I mentioned, the fear was that they might touch the 7%. So the fact that it came at 6.8 might provide a bit of a sentiment, a positive sentiment, but who knows? Anyway, the 6.8 was the highest since 1982. So literally 40 years ago. So this is insane. So pound, cable, big bounce, retesting 8th of December high, didn't manage to break it. It's back to the within the Bollingers. So if there is further steam, it doesn't seem like it. And we consider that MACD remains negative. RSI managed to break though above 50, pointing higher. But so there is a mixed signals over here from our indicators. So parabolic SAR turn positive, okay, turn positive. So turn below the chart, something that supports an upwards movement for the asset. RSI broke 50s at 62 and keeps pointing higher. But MACD remains negative. So this is something that suggests that there is further steam to the upside. However, it might be limited. So yeah, the candle has closed. It managed to touch 8th of December's highs, and it closed back down to 132.30. It's a big 30 minutes candle. So there is further steam to the upside, with the latest high holding as the next immediate resistance area, guys. 132.41. Okay. If I put the 5 and 9, where's my friends? Okay, here we are. Perfect. So fast moving average are keep pointing higher. Shorter and detected MACD, in order to be applied perfectly in a 30 minutes chart, is also rising. So yeah, it seems that there is further support for the asset for the time being, with the next immediate sub resistance area at the latest high and the 132.40 level, which was the latest high of the high of the day, and coincides with the high seen on Tuesday. No, it was on Wednesday. So that's the next resistance area for the asset. On the break of 132.40, eyes could turn to the 200-hour moving average, which coincides with Tuesday's peak as well at 132.60 territory. 50, yeah, 55 to 60. So these are the next immediate resistance areas if the asset continues northwards. Okay, but this is, once again, I repeat that this is the short time frame analysis. We have analyzed 30 minutes chart and 1 hour chart. So if I go to the daily chart, this is the daily chart, you can clearly see that the asset is under pressure overall, since it's keep extending lower and lower with the latest down channel seen since the mid of October, with asset being traded below the 20, the 50, the 200, and even the 10-day moving average. So overall, cable remains under pressure in the long term. Okay, so take care. Separate, to keep on your mind that we are analyzing different time frames. Uh, Running profit, scalp for the March. Oh yes, can we? Let's get back to gold then. Yes, since you're asking for, keep rising. Okay. So, okay. So dollar remains under pressure. Okay, let me just. So, okay, guys, it seems that the dollar continues falling after the data. That's where we're seeing all the majors benefiting on this decline. We can see cable spiking, we can see euro dollar spiking, we can see gold extending higher and managing to sustain this big candle that we have seen earlier. Let me just put, I'm sorry, I need to put the black one. I cannot really. So confirming this rounding bottom that I mentioned earlier. Do you remember this? I told you about this rounding bottom. So indeed, it not solely confirmed this rounding bottom, but it closed well far away from it, well above it. So close to the 200-hour moving average. This is the hourly moving average. Keep extending higher. The fast moving average, I keep pointing higher. Short term MACD, the same. RSI, the same. Stochastic, the same. So there is a lot of buying pressure for gold, with the next resistance area at weeks highs at the 1793. So that's the next resistance area for gold intraday, 1793. And if I just put my Fibonacci expansion on, you can see that it already it already touched the 261 Fibonacci expansion. So yeah, what is the definitely the next immediate resistance area lies on the week's highs. 1793 is the next resistance area for gold. So what that shows is that the markets are actually so so it seems that the market are now really started already pricing in next week's decision. Remember that lately Powell tipped a faster tapper, and that's undoubtedly priced in now. But we could see the same kind of reaction. Uh, we might see the same kind of reaction when it comes, particularly if it comes with caveats about raising rates at the end of the tapper. So, very interesting week ahead, uh, and you need to be very very careful because it's a packed week with a lot of central banks. So that will be a challenging week as well. A lot of volatility is expected. So, okay. So in regards to so yeah, keep extending. Momentum keeps rising. So let's wait and see. Du- 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 du. Let me see the questions, guys. Yes, we did analyze cable, didn't we? Yes. So, so you've seen already. I mentioned that. Okay, indeed, the data should be negative for dollar, but the market, it seems that they have already started turning their attention to next week FOMC meeting. So that's why we might see dollar gaining some ground ahead of today's closure. So try to wait for the noise to calm down a bit, and the market noise to eased a bit. Okay, it's Friday, so you need to take care of it because it's the end of the week. We might see a lot of repositioning. This might be something that is already started. You can see that dollar is turning back down again. So people already started turning their attention on the FOMC next week and the anticipation of a more hawkish comments. So with the inflation news, I caught the long on USA 100. Will this continue considering the sentiment? Let me found Nasdaq. Dear Enrico. Okay, so okay, here is Nasdaq. Oh, by the okay, sorry. Um, we spoke about the technicals of pound. We spoke about the Fed, but we haven't really stated anything about Bank of England. Um, you need, in regards to the Bank of England, guys, um, you need to be aware that the expectations are for the Bank of England to push their interest rate hikes for the year ahead instead of next week. So that's why something that there was. This, along with the restriction from the government, is something that is also adding pressure on the cable, and that's why we've seen a lot of selling today. So uh, um, diminished Bank of England rate hikes bet, softer UK data, GDP data this morning, Brexit on the sterling. So while on the other hand we have a rising US bond yields, hawkish Fed expectations underpinning the dollar, that's why these also are reasons that could see cable from the fundamental perspective to remain under a lot of pressure. Okay, so something that I mentioned is the Bank of England and their expectation to move to push the interest rate hikes for next year, even though it was anticipated to proceed with a rate hike actually in December. So let's get back to Nasdaq, since Enrico is waiting for a reply. Uh, Nasdaq, USA 30. Okay. Okay. So stocks. Um, so a bounce, a boost of the Nasdaq in general. That should be a boost that we've seen in all the US indices up to 1631. Let me just set my intraday setup. Here we are. So boost kick to it hit at the 17 16 300 309 territory, bounce quickly, but okay, RSI started turning lower, even though MACD and stochastic remain bullish. Fast moving average I keep pointing higher. um, but okay, let me just but it seems that let me just so it went up to 16,309. Slow rise. So it seems that this looks to be a limited bounce if we consider the indicators, guys, and the momentum. This is a 1 hour chart. You can see that the Bollingers are like squeezed a bit, narrow a bit, suggesting limited momentum. RSI over here has flattened, right? It's turning to it's in a, it's ready to push the pullback to get back down again, or at least to consolidate. Who knows? But he has flattened. It doesn't really pointing further increase. MACD, even despite the fact that it's positive, is quite close to zero, and stochastic already turned bearishly turned below the overbought territory. So that implies that this bounce on the data might be limited and might there as a continue sideways since it's the end of the week as well. So we might see the US indices like settled and remain steady ahead of the closure tonight. Let me double check to see whether there is something else that I might have missed or something. But uh, but I don't think there is anything else. Let me double check. Uh, yeah. So they did indeed the futures in general, all of them, the USA 100, USA 30, USA 100, indeed they extended gains after inflation. So we have a big boost as the inflation came in line with expectations and higher. But yeah, from the momentum perspective, it looks that this boost is run out of steam. Um, so yeah, will this continue considering the sentiment with this plan? Got the long. Will this continue consider the sentiment? I'm not sure what you're asking for in regards to the sentiment, but you need to have in mind, my dear Enrico, that the markets have already turned their attention to next week's events. So we might see a more steady, mixed sideways closure tonight, or a lot of repositioning ahead of the new week. So But overall, you should know that overall the U.S. indices remain in a neutral to positive outlook. So, despite the Omicron spread, which has added a lot of pressure, some selling pressure on the US indices, overall the outlook for the US stocks remains positive. So that's why they have held the gains of the whole year. You can see that it has managed to recover all the losses that we have seen last week and sustains a move above 1600s. So the outlook remains positive, even on the hawkish side. So an interest if they indeed announce an interest rate hike, then this is something that could also support the US indices as well, because it literally means that their value will be higher. So we have seen cable, guys. Euro pound. Okay, euro pound. Euro pound. Euro pound. Ooh, not so interesting. I don't know why you ask for it, my dear Mangondo. So this is a 1 hour chart. Choppy, choppy, choppy sideways. So what you need to do is identify the immediate resistance support levels. And it seems that the immediate support lies on the latest low, which is at 0.8530, and the latest resistance is at 0.8550, which is is a confluence of the day's high and the upper Bollinger. However, if you closely check the charts, you can see that Bollinger has flattened, something that implies consolidation. The bodies of the candle are small body candles with long tails, again something that presents indecision. The same stands for the momentum indicators intraday. So MACD might be negative, but it's very, very close to zero. So indecision, sideways movement, RSI below 50. So is it? It's a sideways. It's neutral for the time being. So you need to put these support and resistance levels on, and only a breakdown of this level could clear a bit the situation over here and could help you identify a possible direction for the asset in the 1 hour chart. Now you ask for 4 hour chart as well. So this is more exciting than the previous one, but yeah, overall you should know that euro pound it has been on a bit in November and October, since the mid of November. So managed to recover, to get back to 3 months highs, holding above its 20-day moving average, and sustaining gains above the 0.85 territory. So this is the daily chart. Only a break and a move below the 85.20, or to be more precise, above below the 0.85 level, could reverse the positive. So it should be 85 round number, and also more than 40% of November December gains. So only a move below, a dip, a fall below 85, 0.85, could turn the outlook of euro pound to the downside, into a negative one. For the time being, the outlook remains positive, as the asset is keep gaining ground, and moving to the upside, and it has to do again with the central bank. So you need to have in mind that um, the deviation between the two the two countries. And I mentioned some of the factors that are adding pressure to sterling. Okay, I mentioned the virus restrictions that Mr. Boris imposed this week. I mentioned the Brexit. Um, um, I mentioned the sorry, I ran out of steam a bit. So yeah, from a technical perspective, the euro pound remains into an overall positive outlook. And since you want me to analyze the 4 hour chart, this could is something that could help you. So Fibonacci level 85, 85 is a key support area which could flip the uptrend of the overall uptrend of the asset into the downside. So let me get rid of, however, for now the Fibonacci because it gets messy. And look at that. Look how well it satisfies my regression channel, the move that we have seen since the end of November. So currently, if I zoom in a bit, you can see that the asset is really, really close to the lower the lower trend line of the channel. So but it has managed to stabilize for 1, 2, 3, 4, 5, 6 sessions above the 0.8530 level. So uh, theoretically we know that if the asset is moving within a channel, a move if it's seated close to the lower trend line, that implies that eventually it could bounce to the upside again. So we cannot really say that yet, as long as so we need to see in order to identify a boost again and a rebound away from the lower level or lower line of the channel. We need to see the asset breaking the latest up fractal at 0.8550, or at least to break the midline of this channel at 0.8570. So this could be a sign for another move to the upside, posting another higher high at the actually at 0.8620. So for the time being, it's consolidating. So you need to have these lines as your key resistance areas, my dear Mangoro. Okay, the break of 0.8550 could be a sign for a potential retest and a move to the middle line or even the upper trend line of our regression channel, and could retest the 0.8620 level. Okay, so yeah, while further deep, if the asset doesn't manage, if it keeps extending lower and even breaks the bottom of this channel, a breakdown and a move outside the channel could retest the 0.8490 level. Okay, so for the time being, it's consolidating. That's why you need to keep an eye on the immediate support and resistance levels, and I'm referring to the 0.8550 and the 0.8530 level. A break below the 0.8530 could retest this the lower line of the regression channel, while a break of this regression channel and move outside of it, it could open the doors to the 200 period moving average and the 0.8490. So hopefully this helped you, dear Mangodo. You are welcome, Enrico. Uh, please, let's see please let's see how this inflation rates can affect. I think we already covered that, guys, in regards to what inflation today means for the U.S. economy, for the Fed and actions and etc. If you don't have any further questions, I will summarize in order to help you. That's why I'm getting back to the dollar. Uh, so, okay, higher inflation, okay, is a risk for the global economy, for the US economy. It's a risk that it needs to be monitored, it needs to be controlled. So, if we were back to normal, to normality, something like that, uh, in a reasonable levels. I mean, we have seen a growth in inflation. It's supposed to be something good, but now we are in it's way higher than what it should be, than normal. Okay, so that implies so a reading like something, a reading like that, it's supposed to be uh, um, bad. Okay, that's why initially the dollar dip, and that was the logic thing to do. Now, why we're seeing the dollar rising again? Don't forget that next week we are gonna have central banks, and we're gonna have um, we're expecting a more hawkish Fed. So as I said, the market might have already started repositioning or pricing in a more hawkish stance on Wednesday, if I'm not mistaken, from the Fed. So wait a bit for the markets to come down in order to see how it could, where it could settle. But as we can see from the intraday setup, from the technical perspective over here, let me just zoom in a bit. So it's trying to recover some of the gains, hasn't managed yet. Um, Momentum indicators are still negative, though, in contrast with the price action. So let me check a bit what's going on. Yeah. Du- 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 du. Okay. Yeah. So back down 96.24. So please let me see how this inflation rate can affect the market for next. Okay. As I mentioned, guys, this is uh, um, as I mentioned, the dollars you can see over here in this 30-minute chart start to tries to recover some of the losses that we have seen on the announcement. Um, so so it seems that we might see a bit of a pricing in already on the dollar on the potential of a higher interest rate. So can't really say much. Is still below the 20 period moving average. So we don't really have an indication of where it will go, because it's still on the days range, on 2 days range to be more precise. So momentum is neutral. RSI is at 50, MACD is at 0. So there is not a clear indication whether the markets have already started pricing interest rate or whether they will continue pressuring the dollar due to the inflation data. So yeah, for the timing, have in mind these two pivot points, the 96 or even 90, the 96 level, which is the bottom of the day, the coinciding with the Bollingers as well, with the flattening of the Bollingers, and the 96.40, which is the high of the day, also coinciding with the Bollingers. So this is the range. This is the immediate resistance support level that you should keep an eye on, because a breakout of these levels could actually give us an indication whether the markets have already started pricing an interest rate a hawkish Fed next week or not, or whether they will keep the dollar sideways due to the more cautious mode ahead of the Fed. So it's Friday, so what I can see right now is more of a consolidation, a sideways movement, rather than a clear something clearer than that. So it seems that it might continue bouncing between these two levels, but if not, have in mind these two immediate support and resistance levels. So that was it, guys, from me. Hopefully, I managed to help you. If you have any further questions, please stick them in below the live right now. Otherwise, I will call it a date. So I will quick scan the news to see whether anything else is happening that I mentioned. I didn't notice until you put your questions on. Otherwise, I will call it a date. So let me check the news feed. No one asked about dollar yen, but dollar yen had like a big dip. So yen actually benefited um, benefited on the inflation relief. Let's say some sort of stocks were are in a risk on mode, so they are higher, but yields are back towards unchanged. Dollar yen down to 113.45 level. Next support level is at 113.30 level. Oh, someone is asking about ZAR. Okay, let's see. ZAR. So, risk on. Where's dollar ZAR. Come on, where's my dollar ZAR? Should be somewhere. Here we are. So, dollars are expected to rise next week. Okay, so um, overall, the last quarter, the fourth quarter of the year, the dollars are is extending gains, holding well above the 200, the 50, and the 20-day moving average. So this rebound that we have seen this week and this strong candle that we have seen, daily candle, closing yesterday above the 20-day moving average, while also so far today it managed to sustain some gains, implies that momentum is increasing positively. Okay, so but you're asking about next week, so you need to wait for this candle, for the weekly candle to close. You need to wait for today's closure. So if I put the weekly candle on, you can see that we had two negative, we could say, weeks, but with long tails to the downside, but the asset suggesting that a rising bearish bias, but the asset managed to sustain its October. It's actually 1, 12, 13, 13, 14, 15th months, this 15 months support area. So 1570, it used to be a key support, a resistance level for the last 15 months. So this has now turned it into a very important key support level. So despite the two consecutive weekly declines, that it didn't manage to break that support level. So the outlook for dollars remains positive, but it's better to wait for this weekly candle. So tonight, for this weekly candle to close. But then, as you can see from the fact that remains within an up a channel above its 20-day moving average, MACD is positive, RSI is above 50. So the technical support, the medium term positive outlook for dollars are with Next resistance, the midline of my channel at 1614, which is also last week's resistance, is the latest up fractal, while a break of this level could open the doors to the next resistance area at the 1640 level, the latest up fractal, also coinciding with my upper Bollinger. So yeah, um, have a look on the closure tonight, on the closure of the weekly candle, whether it will sustain week's gains or not. But yeah, so far we can see that the asset remains within an uptrend, an up channel. So positive outlook remains, holds for dollar ZAR, even though the parabolics are above the price, but you can see that it's really, really close to the price. So that implies to a reversal to the upside. If the parabolics are come again below the price action next week, below the candles, that's another bullish sign for dollars up. So hopefully I managed to help you, dear. Guys, I need to call it a day. Thank you very much for attending. Hopefully you managed to understand everything that we said, and we managed to help you. For any feel free to give us your feedback, and for anything you need, just contact us and we will help you with anything you need. Have a great weekend ahead. A very, very volatile and massive week is expected. So yeah, take care, and we're gonna see you again next week. Thank you. Have a great week.